Hello and welcome to the Weekly Outlook at XM.com. I'm Maria Pachortiz, and joining me is Senior Investment Analyst Rafi Boyadjian. We'll be taking a look at the week ahead. So Rafi, the upcoming week will be busy. Let's begin in Europe. The ECB at its last meeting added a bigger than expected amount to its pandemic firepower. So is it likely that it will take a backseat in July? And what should we expect from the EU special summit on Friday and Saturday? Do you think EU leaders will agree on a virus relief fund this time?
So Maria, that is right. We did get that big stimulus boost in June by the ECB. So as you said, we're not expecting any changes at the July meeting, though President Christine Lagarde might need to address some concerns about its pandemic emergency purchase program, because there are rumors that there's a split within the Governing Council as to what extent the PEP should be weighted towards countries that need the most support, such as Italy. And if Lagarde fails to reassure investors on that, we could see possibly some spikes in Eurozone yield spreads. But overall, though, the focus will really be on that EU special summit. In June, EU leaders failed to reach an agreement on a virus stimulus package, the big fiscal stimulus package for EU countries. And so far, there's little indication that EU leaders have been able to resolve their differences. We're seeing strong opposition from some member states to a generous package that would be made up mainly of grants as opposed to loans. So it's possible we may yet see another delay in a decision, or even if we do get one, if it's a compromise that favors the frugal countries, then that might possibly be quite negative for the euro.
Okay, moving on to the other central bank meetings that are coming up. The Bank of Japan will hold its two-day policy meeting on Tuesday and Wednesday, and the Bank of Canada will announce its decision on Wednesday. Are both central banks expected to keep policy unchanged?
So yeah, those two meetings are expected to be quite uneventful, although there will still be some attention, as for example with the Bank of Japan, they will be publishing their quarterly forecasts. The Bank of Japan has been quite downbeat about Japan's economic prospects, so the investors will be watching the BoJ's language carefully to get any hints of possible future policy action. For now, though, the BoJ will probably be hoping that the reopening of the economy will be enough to help the economy recover. As for the Bank of Canada, we have had some strong signals from the new governor, Tiff Macklem, in a recent speech that at the July meeting they will lay out their plans as to what they'll be looking out for in the incoming data. So that should help give investors a better picture of what the BoC is looking for in terms of assessing the economic recovery in Canada. And of course, we will also be getting some quarterly forecasts as well from the Bank of Canada. So on the whole, if we do, we'll expect to see both central banks being fairly dovish, and that's likely to hurt the loonie far more than the Japanese yen, which the yen, of course, is mainly driven by safe haven flows as opposed to risks like the risk-sensitive Canadian dollar.
Taking a look at upcoming data now, China's GDP estimate for the second quarter is expected to attract a lot of attention on Thursday. And over in the UK, we'll get a lot of data, but the monthly GDP estimate on Tuesday will be the most crucial. What should we be looking out for?
Well, we are expecting China's economy to have returned to growth in the second quarter, growing by 2.5% after shrinking by almost 7% in the first quarter. But while that may reassure investors that the recovery is so far looking V-shaped, it might not help ease concerns about the recovery getting derailed as many countries are currently seeing a resurgence of virus cases. So even if China isn't doing too badly domestically on the virus front, a weak growth elsewhere will limit as to how far the Chinese economy will be able to recover in the coming months. As for the UK, we did see a record monthly drop in GDP in April, and forecasts for May are for only a modest recovery, rising by just 5% as opposed to the 20% drop. Nevertheless, given the positive recent developments on, we did just get an announcement of further UK fiscal stimulus, and there's some signs that maybe Brexit talks are going a little bit better than they have been recently, with some signs of compromise in the air. So any signs of improving data could help provide further support to the pound, which has been outperforming for the past week.
And finally, over in the US, we'll get the June retail sales report along with manufacturing and industrial output numbers. Is this data likely to affect the greenback?
So the US is in fact most at risk of its economy seeing a huge disruption from this escalation in virus cases we're seeing in several countries. The US we're seeing the biggest escalation. Several states in America have either paused or rolled back plans to reopen their economies, and we might see the first evidence of whether that is starting to hamper the recovery from next week's data for the month of June. The primary one will be retail sales on Thursday, and forecasts are for the rebound in retail sales to have slowed significantly to 4.5%. And if investors aren't really impressed with those numbers, then the dollar could start to edge up again, mainly because the dollar is now behaving as a safe haven. So even if you see disappointing domestic data, that would be boosting the dollar. And we did see the dollar having slid for most of the past week. The dollar did edge up towards the end of the week as we still saw a deterioration in risk appetite.
Rafi, thanks so much. And thanks for joining us at XM.com.